What's up, everybody? We just recorded another episode of our podcast, The Money Huddle. And in this episode, we talk about some of the unemployment numbers we keep seeing. We talk about some ideas for small businesses and what we think we might need to start seeing as far as a path forward to recovery. Hope you enjoy.
Welcome to the Money Huddle, a podcast that explores financial topics for families and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Planners Alliance. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Planners Alliance may maintain positions in securities discussed on the program.
Welcome back to the Money Huddle. My name is Michael Baker, and I'm here with Ross Marinell. This is, what did we say? This is episode 3 of Money Huddle, the Quarantine Chronicles. And,
Virtual number 3. Well, now at this point, we're getting pretty good at these, huh?
Yeah, you get momentum, and then it just kind of becomes second nature. So we'll just keep it rolling. But you said you had something to start us off today. What do you got?
So I thought it was kind of interesting how quickly a lot of the sporting events got the plug pulled.
Yes.
And I saw an article come through today, and this was kind of the aha moment. I was like, oh, now I know why. Obviously, there's a public health concern with pulling groups of people together. But I'm talking about major sporting events. So I came across a tweet from Darren Ravel, and then I also found another article related to this. But Wimbledon reportedly paid $2 million a year for pandemic insurance for the last 17 years. And for this year's cancellation as a result of the coronavirus, Wimbledon will reportedly receive $141 million from the policy.
Boom.
So I didn't realize that you could insure for pandemics. But it seems to me that some of these major sporting events probably had some form or potentially had some form of insurance for these types of issues. So I thought, it's kind of, it obviously is no fun to not have the events. You're missing the NCAA tournament was the big one for us in America. Then, of course, Wimbledon, we've lost the Masters. We're seeing NBA is just, is on hiatus right now. We might miss the end of the NBA season. Who knows if they'll come back. And curious to just think how many of those might have had some form of insurance to protect against the lost revenue.
What was the year they started paying for that?
So I think it was related back to the SARS,
right?
Yeah. So I think when that happens, and a lot of these big sporting events probably lost revenue that year, like alarm bells went off, and so they started paying for some pandemic insurance. And this year, they'll reportedly receive $140 million for the lost revenue.
That's nuts.
I saw one related to the NCAA. It says NCAA has insurance and rainy day fund to cover entire costs of canceling March Madness. Now that came from the Daily Caller, so you never know. I mean, take it with a grain of salt, but is it possible that they had insurance to protect them from the loss, and that's why they were so quick to move and not try and have? Because I thought at first maybe they'd have the events without people, without fans,
right?
If they just had the athletes play, if they could test them and know that they were, free of the virus, could they play? Sure. But so that didn't happen. But I thought that was news to me. I came across, I was like, oh gosh, never even thought about, these major institutions having insurance for that.
Well, hopefully the insurance company had been planning to make a huge payout one day, because that's obviously they paid for the policy, so they got to be ready for that. But that's, I mean, good for them. Good for them for planning for that. I mean, it sounds like it's a huge expense, but we're talking hundreds of millions of dollars, obviously, in potential lost revenue for not being able to have your tournament. So that's a huge deal.
Yes. So another event-filled week in market-related news. What's on your mind this week, Michael?
Of course, I had another thought today. I continue to mull over these unemployment numbers and, why they are so they're horrible, of course. Today I think was it 6 million, 6.6 million, something like that. Close to 16 million on new initial unemployment claims in the last 3 weeks. But you know what? I was on a call with our local representative here, Congressman Ralph Norman, a couple days ago, and he had someone from the state of South Carolina unemployment on the phone on the call as well. And the one thing that I think will be interesting to see when the dust settles, that's happening with unemployment that hasn't happened before, or typically doesn't happen, is self-employed people are eligible to file claims. Now, a lot of states, according to what we were told, a lot of states are not equipped and don't have their programs built to take unemployment applications from people who are self-employed, because typically you're not allowed to file if you're self-employed.
Right.
It's one of those hard things about being in business for yourself. You don't really have a government-backed safety net. Well, I'm wondering if part of all of these massive claims of unemployment are going to be a lot of people who would not traditionally also be able to file. Because if you think about your traditional workforce, your traditional W-2 folks, and then you add to them people that are self-employed or independent contractors who wouldn't necessarily be able to file, but you add them to the pot, if that's part of what is driving these massive numbers that we're seeing. It doesn't make the numbers good, but I've just continued to try to chew on those numbers a little bit and decipher, because we're only getting hit with like the broad end of the brush, right? Like, oh, another 6 million. But I'm trying to, interpret a little bit like what these numbers, how we're getting to these numbers exactly. And so,
Well, hopefully those numbers do include some self-employed folks, because if everyone's quarantined together, if we're all stuck at home and we can't go out and work, and we want to go out and work but we physically can't do it,
yeah.
then I hope that they're getting the support that they need. Because as you kind of highlighted over the past few days, the PPP loan process hasn't been going so great. Um, give a little insight to our listeners, how that process has been, kind of where we are with getting people funding.
So the PPP loan stands for Paycheck Protection Program. It's the loan that came out of the CARES Act. And in fact, they were trying today. Mitch McConnell was trying today to get unanimous consent in the Senate to go ahead and authorize another $250 billion for that package, and that was the Democrats would not let it happen. So there's politics at work again. But one of the big things of frustration is this program was created in a matter of weeks, if that days, if not days. The banks were recruited to basically be the frontline folks for the SBA. Not all banks and credit unions were actually authorized to make SBA loans. So you have this huge backlog of people that have been hearing about the process and aware of the process, millions of business owners aware of the process for a fair amount of time in advance. And then they tell everybody, first come, first serve, here you go. A lot of banks weren't even ready to begin taking applications. I actually saw someone today talking online that Citi is still not taking applications yet, which is mind-blowing for me. So it's just a huge source of of stress for people that are trying to figure out how they can apply. And then, most of what the communication we're getting, just by default, the banks don't have the manpower to administer something like this. So it's a lot of electronic communications, someone will call you, someone will email you. So there's a lot of frustration. But I had an idea about this today, and this is one of the things I want to talk about. So I was chatting earlier today, and I'm still somewhat, and I don't want to come across as being critical. I really and truly don't, but I've been somewhat astounded by the number of businesses that can't run or operate for 3 weeks, 4 weeks without revenue. So we're having a huge cash crunch. And I believe, one, I'm going to take the optimistic side of this. a lot of business owners will get their act together and realize, like, hey, something completely out of the blue could happen to me. I need to have a good reserve. But right now we have to deal with the problem we've got. And the thought I was having is there was another part of the CARES Act that came through in addition to these loans, and that was relaxed access to retirement plans and retirement funds. With your 401k qualified retirement money, like a 401k, like an IRA, they allowed up to $100,000. You can have access to the funds without paying an early withdrawal penalty if you're younger than 59 and a half. Number two is you have the ability to pay the money back over a 3-year period, in any interval that you want. You can pay it all back one big lump sum. You can pay it back, but you have 3 years to pay the money back. You also can spread the tax liability over a 3-year period. And this is what I was thinking is a lot of people, I believe, are going to be able to qualify for these PPP loans for loan forgiveness, but they're not going to be able to get the money right now. It's going to take a little while to get the money. Some of these business owners may want to consider leveraging this early access to IRA money so they have cash now, because this is something you could do right now. And the provisions are, there's rules. You have to abide by the rules. But if these rules apply to you, you could consider using this money, getting access to your capital now so you can keep your business open, flowing, keep things running, get through this rough patch. Down the road, you're likely going to get an additional infusion of the PPP money or whatever you were eligible to receive. And then if you do qualify for forgiveness, you could use some of that PPP money to go back to replenish and put the money back into your retirement account. And I was thinking about that as, there seems to be a much more need for money right now than I'm not hearing so much how much money. It's just, we need something right now. And that was what
it seems to me really quickly, the relief checks for the stimulus, I don't know anyone that's received one yet.
No.
So relief checks haven't hit. We're now on what? It's April 9th. So we're 9 days into the new month. So
Right.
Rent's already due. Rent is, in some places maybe late after 5 days.
Sure.
Utility bills are due. Car payments are due. And we're still waiting on stimulus relief money. I'm surprised that those checks haven't been delivered yet. Then on top of it, you have a lot of promising loan, potentially, like you said, forgiven loans that are there. There's a lot of money reserved for it, but if no one's getting qualified for them, the applications aren't being approved as quickly as we would have hoped. The banks aren't prepared for the influx, the amount of people that are applying, the amount of businesses that are trying to get these funds. And like you said, you may have to end up using retirement funds to stopgap some, essential business operation until we can get some of this stuff squared away. You said something earlier I want to come back to. You
Sure.
said, how many businesses were prepared for, an event like this. And this was from Morgan Housel. So, he's great. He's one of our Twitter faves. He said, new important metric is, quote unquote, days of solvency with zero revenue. Said, I don't think that equation has actually ever been run before. So we're talking about, how does a business operate during a downturn or a recession, or what are the, how is profitability, variable in different economic cycles? That's, there's some data on that. We've never had a situation where we've had to factor how long can you last with zero revenue when you're physically shut down. And we're starting to find out that that's problematic for many businesses, large and small. So sure, we're going to see small businesses that are struggling with that, but we're also seeing, pretty sizable businesses struggling with zero revenue because we've never experienced it before. We're in uncharted waters.
Yeah, no, I mean, and I'm not smart enough to have all the solutions. I just think about, and I'll use myself as an example, or anybody that's self-employed and you're accustomed to having not consistent income. Maybe you make good income, but you're not used to just getting consistent W-2 paycheck deposits in your account. If you're a business and you have business models where you have kind of chunky income, where you get, you have really good quarters and then you have really lean quarters, or you're a cyclical business where, you have a really good season and then you have a down season. I would be shocked if a lot of these people aren't doing much better because they're forced to kind of put money aside to get them through lean times and have reserves versus people that are, or businesses that, they need high volume or consistent turnover to kind of keep things going. And then, you slam the brakes, it's going to impact everybody differently, but the magnitude of the impact, I think, is going to be really, really felt more by the people that have just really thin margins and they need constant turnover to keep the wheels turning. And I don't know, but I've thought about that more and more, and I'm hoping that this will be a great lesson for a lot of businesses about the importance of just, even if you could just plan to have a month's worth of capital set aside where, what if we don't make any money, like no income for 1 month, like, and then like he said, that's a perfect equation. Like, days of solvency with no revenue.
Yeah, I think so. Well, remember too, just because you're a business owner doesn't mean you're a high income earner. I mean, there
Exactly.
are lots of businesses that where you earn a living and you're comfortable, but you might find yourself in a middle class income. And I think we put so much stress and pressure on business owners to have every solution figured out.
Sure.
I think we have, part of the reason why these loans are so important is because this is such a statistical anomaly that it's impossible for people to prepare for an event like this to happen so quickly, right? I mean, this is upon us in a matter of days,
Sure.
and you don't have time to prepare to not be able to operate.
And
And
how do you build into your business plan? What do we do if the government tells us we can't open our doors and have, we're basically mandated to shut down?
right,
They don't
that's
really
why these
talk, they don't really teach that in business school.
right. So at the end of the last podcast we were discussing some of the hope we thought were promising loan programs to help
Sure.
stopgap business owners, and I ended that saying, well, the government has to deliver. Like, we have to be able to issue these loans. And so what we're finding in the very short run, and it's only been a few days, is that this isn't going the way I think we hoped.
It's not going the way we hoped. It's going exactly how I thought it would go, just with the bottleneck, of efficiency. And it's really unfortunate. Hopefully, they can get people working on this around the clock. I've seen just, you know, the stories that I keep seeing people talk about online. Everyone's getting it's very, very individualized because different banks and institutions all have a different process, and it's all being handled differently. So some people are getting through the queues a lot faster. Some people are not even filling out their loan applications yet. Now, the one so to circle back, the one thing that, Secretary Mnuchin and them keep saying is that it's important to them to have the money for the loans. They want to have plenty of money. Don't worry about that. The problem is right now is the speed at which people are going to get access to the money and have their loans approved or have money get to them. That is why I'm saying, you know what, let's it's not going to feel good tapping a retirement account, but if you've got a 401k, or if you've got with your business, or you have a simple IRA or SEP IRA or just a regular IRA, that you have some assets there that you could tap, to bridge you. And we know that these loans that are supposed to be coming, you're supposed to qualify for forgiveness if you play by the rules. You might be able to kind of front yourself the money from your own pockets today quickly, and then when the government catches up to things and we get this additional influx of money, you can then pay yourself back, or slowly work on creating a repayment plan. And that might be a solution for a lot of businesses that are in a capital crunch, like right now. Like, they need money next week and they don't know where it's coming from. That could be an idea worth exploring, in my view. So that's one idea. What else you got? Anything else you want to talk
So
about?
market's been on a little bit of a rally this week. From the lows, we're now down. I was looking in Y charts today. S&P 500 year to date was down about 15%.
Yeah.
So that might get a little better or a little worse today, depending on how we close. But
2 minutes close.
it's kind of remarkable from where we were just 2.5, 3 weeks ago.
Yeah.
One of the fastest declines, or fastest 30% declines we've seen, to have a pretty quick in steep recovery back. Now that doesn't mean, again, we're out of the woods.
So I'm going to ask you that. So we're, you know, what's your opinion? Do you feel like we'll see some more downside action? Do the poll that's being put out on the financial Twitter right now is, have we seen the bottom, or is this a bear market rally where we're probably going back down again?
I think a lot of that's going to stem from our last conversation.
Yeah.
Which is, how quickly do we get relief to small businesses to keep their doors open?
Mm-hmm.
Because small businesses hire and employ so many people that if we fail on this mission to get proper funding to these businesses in a timely manner that they can stay open, then I don't know where we're going to go. I think we could retest lows and see continued, and maybe what the real problem could be here is the slower trajectory of recovery, right? Because if people are able to go outside and re-engage in the workforce, but there's no job for them to go to, now we're going to have a slower churn to get back to the unemployment numbers, the low level of unemployment that we had before all this started.
Yeah.
That could take months to get back if these small businesses are not able to continue. But for the short run, the other side of this equation is, the Fed announced today another $2 trillion in stimulus.
Yes.
And this focused on bonds and some high yield bonds, and so
Buzz
we're seeing
Buzz Lightyear is now the chairman of the Federal Reserve to infinity and beyond.
So
That's where we're going.
Without getting technical, just a big picture idea is, how do you one of the things we rely on the market to do is sort of find price discovery, right? That's just the market participants being able to read the data and formulate a price of a stock, right? Based on all the metrics that are available, sales, earnings, whatever you want to, analyze. How do we find price discovery if there's so much stimulus money being injected from the Fed and on all fronts? I think it's very difficult to be able to assess what the true value of something is if we don't know how that extra capital is being used.
Right.
I thought about this though, Michael. I had an idea today. So I was having a conversation yesterday with somebody, and they were talking about generation, right? So generations. So I was like, well, I'm Generation X, and I realized today this is our third recession.
Yeah.
If you really think about it, I graduated in college in '99.
We had .com, then financial crisis, and now here we go with coronavirus.
Yeah,
COVID-19 crisis.
Third recession in our working careers, depending on the range of when you were born. But
aren't they so neatly spread out too? It's like every 10 years we just get a good kick in the teeth.
We were basically like, in 20 years, this is the third recession. So I was in Y charts, just looking at the S&P 500, right?
Sure.
So 10-year return when I looked this morning was still just a notch over 11%, which sounds pretty appealing, right? 15-year return was just a notch over 8%.
Right.
20-year return, Michael, it was just over 5%.
On the S&P.
On the S&P 500, so it's 5.05% return. And if you were to tell somebody investing in stocks you should expect a 5% return, they would probably look at you funny, right? Because we've become so accustomed over the last decade to expect and receive better returns. But for a Gen X like myself, that's what the numbers are at. When you have 3 recessions in that period of time, it has a pretty dramatic effect on total return.
So I think to that point, one of the things we should be stressing to, our younger folks is it's not, it's every bit as much important that you start early to save and start trying to build your assets, because 5%, 5 to 6%, it's not exciting, but 5 to 6% compounded over time, can add up to something. But you have to have money in there early to have something to build from. And I know everyone's different, and they're going to have different areas that what they can do. But at the same time, it's, the longer you delay or defer, I mean, even if we sat here and, we can't do the math, on the fly, but if you took somebody who had been contributing for 20 years, getting those compounded 5 to 6% rate of returns, and you match them up with somebody that had maybe been doing the last 10 and was getting, a higher rate of compounded rate of return, but 10 years of not participating, I bet you that the numbers would be very telling to see the difference in the two.
Right. Yeah, start early and start small if you have to. I just thought that was came across my mind today because um, it is spread out nice, every basically 7 years.
Yeah,
But for a fairly young, younger-ish investor, that's been an eye-opening. They're getting experience.
exactly. And the other thing too is not, this isn't just about younger investors. For folks that are a little bit older, maybe getting closer to their retirement years or in their retirement years, this is one of the reasons we talk about what we call sequence of return risk, or the order of returns, because it's not that we have these downturns, but it's the magnitude. If you go back and you look at, we can look at data and we could pull out like what, a traditional correction is, like a 10% blip, 10 to 12% blip that, typically takes care of itself intra-year in the market. But you have somebody that, is getting ready to retire, and they get hit with a 40 to 50% decline in asset levels during the financial crisis, or like just what we just experienced in a span of 30 days or 19 days, we see a 30% drawdown in equity prices. That is staggering. You almost don't have the ability to move and check from that, or you're just panic selling. And that's why we always tell people is like, you know, we believe in the markets, but we also believe in understanding your specific level of risk tolerance and also your time horizon. Risk management is so key for folks that are trying to plan for that transition from the workforce into retirement. And a lot of people, there are going to be a lot of people, unfortunately, that were probably close to reaching that threshold, but because of the economy and layoffs and stuff, they're being forced into potentially an early retirement, and their 401k or assets have been hit hard. And now they got to figure out, am I going to have to go back to work? What am I going to have to do? Because, my accounts are down, significantly from where they were not even 2 months ago. And that's a position that, if you're going to be investing in the market, the risk comes with it, but having a good long-term plan of how to protect yourself and at least begin evaluating yourself in different phases of your investment journey, to us is so key. And that's why we preach that over and over and over again. Sometimes I feel like a broken record when we keep saying the same things, but then you have something like this happen and you're like, well, thank goodness, this is something that we've been telling people. At least we don't feel like, we haven't been saying this.
No doubt. Well, one of the things we've been focused on over the last few years is just the pace, how quickly things escalate, whether that's good or bad. And some of the conversations we've been having around the decline is, when you see, like you said, a 30% drawdown happen with inside of a month, it's alarming. It's still alarming. Just thinking today, we're sort of, we're recovering from that. Whether that's we're in the greener pastures for now, we don't know,
Right.
but we're kind of recovering from that. It's still alarming, the pace of the decline. But some of the conversations we've had around that is, well, it might take a year, 2, 3, 4, 5 years to recover from that.
Sure.
And something we've learned is, on the flip side too, right? The recovery has been of a very fast pace as well. It just seems like we're moving quickly in every direction. And so hopefully we can see, volatility started to fall a little bit. If you follow VIX index, and that's helpful to more steady investing. Like to get some normalcy back in the markets. Hopefully we continue to climb from here. We know the economic data is going to be very treacherous for the next few weeks. It's just no way around it.
What are you thinking we need to see to kind of get our footing back and at least feel like we're definitely on the road to recovery. I mean, what do you think needs to start unfolding?
Well, as soon as we can get a grasp on the slow the slowing of this virus spreading, right? We need people to get back to work, but when we're talking with stocks, it's going to be earnings
Hmm.
because we're about ready to start seeing earnings for first quarter. You know that the March is going to have some harsh effects for some businesses,
Hmm.
but it's going to be really telling to see from an earnings standpoint which businesses thrived and which ones suffered, because there will certainly be some winners that come from this experience. And um, we were talking before we started recording. If I said the S&P 500 was down, what, about 15% around, as we're recording today, but QQQ, which tracks the NASDAQ 100, is only down about 5.
Right.
Well, if you look at the composition of QQQ, that's a lot of your NASDAQ 100 stocks, right? Your large tech companies,
Right.
Amazon, Apple, Google, Facebook. I mean, you name it, you just go down the list, right? And how will they recover from this? I mean, they're not down very much. That index is not down very far compared to the S&P 500. How will those businesses report over the next couple of quarters? I think is going to have some pretty big impact on our total stock market.
Yeah, I agree with you. And the one thing that I'm looking for, I don't think we'll see anything um, before, tomorrow's Good Friday, Sunday is Easter. I don't think we'll see any or hear anything about it, but before next week. But one of the things I'm looking for, possibly mid to late next week, is I am hoping we will start to hear a blueprint for reopening businesses. Doesn't mean that they're going to say, hey, this is exactly what's going to happen, because we have the social distancing orders and things like that. They've told us April 30th, so they can always move those dates back if they feel like that's required. But I'm hoping that they start to bring people out or put a team together that's going to start giving us some guidelines of how we can begin to phase in a reopening. And because I was talking with my wife, Elizabeth, and I was telling her, I really want to hear, I want these small businesses to give them a chance. Don't make them go out of business because you made them shut their doors and we couldn't get them money fast enough. If we can socially distance and go to Walmart, we can socially distance and go to Tony's hardware store. We can
Right.
socially distance and go to these other local places, these mom and pop shops, these handymen and people like that. There's people that are being told they can't work right now. And, if we can go stand 6 feet apart and, go visit Walmart, and then I can stand, 2 feet or 3 feet away from a checkout person, there are other businesses that could operate too. And I'm hoping that they will begin giving us a blueprint for that, so that at least everybody can start to at least get some hope and maybe see that there is a light at the end of the tunnel, because that will do a lot for people's morale. And I don't want to underscore um, business owners and their fighting spirit. I think a lot of people, if they feel like they're going to, this was a really hard, rough patch, but they're going to be given a shot to like get back in the game. I think that could do a lot for people. And so that's what I'm hoping for, in addition to the stuff that you shared.
Absolutely. It feels like what's happening with the release of these SBA funds and the slowness, just the delay. It's sort of like in an NFL, right? An NFL offense coming out of a timeout and having a delay a game.
Yeah.
It's like we just huddled up to talk about what we're going to do next, and we didn't get the play executed. And I feel like we're at that stage now where it's like we've gotten the first delay a game penalty. Are we going to have another one? Let's just
It's a
get the
fault,
money
like
going.
false start. Totally. A
Yeah.
total false start. So
Well, it's good seeing you, buddy.
absolutely.
To all of our listeners out there, if you have feedback on the PPP program, if there's topics you want to know about, please share with us. I'd actually really like to know some feedback on if people have gotten funds, what their process and experience has been like.
Yeah. If you've received loans, or just give us some feedback on what the application process has been like, because we're hearing so many different stories. And it would be great just to get some real life anecdotal evidence of what people are experiencing. But as always, thank you guys for listening. Thank you for the questions and comments that we get. We really appreciate those. Anytime that we could talk about, something that's relevant, please don't hesitate to reach out to us. You can find us on Facebook. You can send us an email at themoneyhuddle@vcplanning.com. And we will talk to you next time.